This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day ES S&P 500 futures trading video for Tuesday, May 5th. So let's start with last night's Globex session. Europe opens 3 a.m. Eastern Time, U.S., and then at 4 o'clock, you had a high up into 28.63.64. Very fast move down 30 handles. 5 a.m., New York trade desks begin to get active, and at 5:30, well, let's just take 5 o'clock. 5 o'clock, you had 5 a.m. this morning, you had a low of 28.36. And then you get this crazy move all the way up to 28.90. Now, the first thing I want to point out are these angled lines right here. These are algorithmic regression lines. A regression line, in algorithmic terms, is a formula based on the relationship between time and price. And one of the most amazing things our systems do is draw these regression lines. It's a formula. It tells us point A, point B, and then it just extends. And we have upsloping regression lines. We have downsloping regression lines. So you can see this downsloping regression line. And see how this cuts through this area here? And then when it's retaken, you have this move back up. Now, on this screen here, this is our swing trade algo. This is our day trade algo. So if you're a day trader, this is a faster time cycle. The swing trading algo is for folks that are looking for positions that are more of a multi-day variety. So our algo was long. The swing trade algo was long from 27.98 on Monday. And that flipped short in here about, call it 28.67. Our day trade algo, it's tuned to a faster time cycle. It's more responsive. So the algo, of course, was long all the way up. And notice where it flipped, right here. Now, we actually shorted a little bit before that because there were other indicators that implied that this was a topping process. And what was interesting about it is you got this very marginal high, just a couple of ticks. And one of the characteristics of the E-mini is when it makes a new high for the day or for a multi-day period, and same thing with lows. When it takes out a high or it takes out a low and it doesn't see more stops to consume, the algos go the other way. If they can't find stops like little Pac-Men, if they don't see stops that they can consume, there's no more stops left to run, and what happens? The machines take it the other way. Now, there's more to it than just that. But we were actually short right in here at 28.83.50. And that position was covered right here, right in the end of the extended portion of the day session at 28.59.50. So nice trade. Short 83.50, covered at 59.50. The way we manage our trades is we manage the trades in thirds. So and what I mean by managing trades in thirds is this. You take your position size, you divide it up into 3 pieces. So as that trade starts to go your way, in the case of this short, you take the first third off and you adjust your stop to break even. So that way you've booked some profit. If it reverses and goes against you, you've booked a portion of the profit. After you take the first third, then we look for a spot to take what we call the middle third, right? We've got a number of metrics that help us determine at what point to take that middle third. But what's unique about our system is it combines moving time price oscillators, which you see here, and you also see them over here. And it combines these oscillators with fixed price point pivots. And these are not the kind of pivots that you can find for free on the internet that are based on price. Price pivots are useless. They're absolutely useless. Our pivots are unique because they are tuned to the same time cycles that the institutional algos use. There's quite a few time cycles. There's 6 or 7 main ones. But our algos are tuned into all these time cycles, and at very specific times of day we run the algos. For example, everything you see on this chart with the exception of this long cycle pivot. These were all run in the morning, 90 minutes before the market opened. And it's very precise because the time cycles, they all overlap at specific minutes. I mean, to the minute each morning. And that's when we run the algo. And that's what gives us levels like this. For example, take this pivot here. This is called a tick acceleration pivot. This pivot was run 90 minutes before the market opened. You came down exactly to it, to the tick, and then you got a reflexive move back up from 54 to 69, 15 handles after hitting it to the tick. Then you come up to this pivot at 68.66. Again, this was run 90 minutes before the market opened. So you get a move that starts up here at 28.90 and comes down 36 handles and stops to the tick at a pivot that was run 90 minutes before the market opened. And then what does it do? 15 minutes later, it runs up and stops within 2 ticks of another pivot that was run 90 minutes before the market opened. Then it came down again to this same pivot and then went back up to this same pivot that we just talked about. Then you come down here in Globex. Here's our trend change warning pivot again. This was run 90 minutes before the market opened. Look where it stopped. Now here you've got 3 pivots that are overlapping. You have our backtest pivot, tick point of control, short cycle, trend change warning pivot. This is the other thing that's unique about our system. It's so sophisticated that when it outputs the data in the morning, 90 minutes before the market opens, not only does it give us the levels, the number, it gives us a descriptive name that tells us the type of behavior, the type of pivot it is. So you've got trend pivots like these orange backtest pivots. You've got tick pivots. Of course, here you've got the tick point of control pivot. Here you've got trend change warning pivots. So the algorithm is that sophisticated that it not only gives you the price level, but it gives you the type of behavior to expect. Now, this one right here, this is what's called a tick acceleration pivot. Now, when price comes from a very far distance, in this case from 90 down to 54, 36 handles, because of the distance move, the first time it comes down into one of these acceleration pivots, it holds. But ultimately, these break, and the acceleration pivots do what the name implies. You get a fast move lower. Now, this over here, this is our proprietary time price oscillator. And we've got a day trading version that runs on the same time cycle as this. And we've got a longer cycle swing version that you see down here. But I want to call your attention to this dashed white line. This is the big deal if you're a day trader, because this is arguably the most important price at any time during the day. Now, notice what happened. Let's go back again to the overnight session. So here's 3 a.m. You get your European Open, price meanders around a little bit, and then boom, 30 handle drop. Now, where did it come down to? Came down to one of our proprietary oscillators. The reason that this held here isn't just the fact that folks at the New York trade desks showed up and decided, hey, let's buy him today. The reason it held this area is because you had, aside from this white oscillator, 1, 2, 3 oscillators right here. When these are overlapped, the more you have it at a particular level, the more powerful that support or resistance level becomes. So price comes down into this cluster of time price algorithmic oscillators. And from there, I call it 32.33, you get this move up to 90. Now we're going to talk about what this red line is in a minute, because this is another regression line. As a matter of fact, let's take a look at that now. The cool thing about these algo regression lines is that ES, the E-mini, gets magnetized back to these levels over and over and over again. So here you've got the algo regression line. This is Friday. So Friday, it broke, came back up and failed once, came back up and failed twice, poked its head above it a little bit and failed again. Now, typically 3 strikes and you're out. So you fail 1, 2, and then the third time, forget about it. But when price breaks underneath these regression lines, it gets magnetized back to it. And eventually, except for the very, very steeply angled lines, like this one here, I don't think we're ever going to see this one again. We may not ever see this one again. But this is the regression line activity from Friday, May 1st. So here we are Tuesday, 3 trading days later, 2 trading days later. And where does price return? Right here. So when you're looking at the chart and the trading appears random, it really isn't. Price came right back up to the regression line. Now, this area here is right about 28.60. So Sunday night, you came down into, let's call it 27.75-ish. You had 115, 120 handle move back that literally stopped to the tick at the same regression line that it failed at on Friday. That's not an accident. When people try to sell you trading systems that don't have time cycles embedded in them, they're going to be hit, they're going to be missed, sometimes they're going to work, sometimes they're not going to work. But there's one constant in life, and that is time. Take a look at a clock. There's the same number of hours, minutes, and seconds in every day. Well, there's the same number of hours, minutes, and seconds in every trading day, except for, you know, those few days where we have half-day sessions on holidays. And that's why the institutional algos are anchored to time. I mentioned earlier that just price-based pivots that you can get free on the internet are useless. The reason they're useless is because they're completely arbitrary and random. See, here we have the price axis. Price hypothetically starts at 0 and goes to 100. Well, how do you link anything to something that doesn't return to the same spots? It's not a cycle. This is linear. And so pivots that you get for free, there's a reason we charge for this. There's also a reason that you can get a billion different websites that give you pivot levels for free. They're useless. Pivots based on numbers, on price, are useless. But because our systems are based on time and price and heavily weighted to time, those of you watching this video are probably familiar with W.D. Gann. What did Gann say? Time is more important than price. Time existed long before numbers existed. Numbers are a construct of humans that only dates back, several thousand years. Time goes back to the beginning of creation. And yes, I said creation, not evolution. And I don't want to get off on a tangent, but let me debunk evolution real simply. What was the evolution of time? If you can explain to me how time evolved, then I'll accept an argument that evolution exists. Anyway, that's not the purpose of this. But if you watched the last video or the video before that, you see the MyPillow guy on TV, Mike Lindell. He's got a book, 13 Near-Death Experiences. And he makes a statement at the beginning of the commercial, and he says that he spent his life using mathematics to prove God's existence. God is, period. Time is, period. You can't add anything to time. You can't subtract anything to time. There's mathematic sequences that exist all throughout nature. And I'm not talking about Fibonacci, and I'm not talking about the golden ratio. I am telling you that there are time sequences that people don't know about. Because when we think of sequences, people think of Fibonacci, you think of the golden ratio, things like that. That's not what I'm talking about. There's a number sequence in the construction of the pyramids, right? There's a number sequence in the construction of the heavens, in astronomy. There are number sequences in time. And that's why these systems are as accurate as they are. And there are no other consumer-based systems. You cannot get this stuff outside of institutional algos. Those same institutional algos that jerk you around every day if you're trying to trade the market without them. So here's the regression line, bumped into the same level that it did on Friday. Now, this was taken earlier this morning. I'm sorry, this was taken right around lunchtime. So, next chart. You come up to the regression line, same exact one that it failed at on Friday. You come down to, call it 27.75. You run up 120 handles and stop to the tick. You get a little pullback. You come up again, a little bit of a move above, and it fails. Then it moves up again and fails. And it moves below and it moves above the third time. And that time it broke. So that got you down to the close here. This chart's from 415. One more slide to show you. These are time price oscillators. These are not moving averages or exponential moving averages. These are time price oscillators. You're not going to get this out of the box on your trading platform. And for you to duplicate this chart, you would literally have to pick about 16 numbers from 1 to 10,000 and get every single one of them right. That's how sophisticated it is to get this number sequence. So the key short-term oscillator is this one right here. This is what I showed you a few minutes ago. European Open, move down. Anytime you have a confluence of overlapping oscillators, they become very firm. That's what gave you this move up. This is the key short-term, if you're a day trader, this is the key oscillator, this dashed white line. This is the fastest algo on here. Fastest algo, and then as they get increasingly longer in time, you go from the dashed white one to the solid white one to the dotted white one. Your trend algos, those are the orange ones. But this is the important one if you're a day trader. Because, and I mentioned this on our live chart, if you're a member to Mercury Signals, and you can see our website here if you want to find out more, mercurysignals.com. This live chart, a version of this is what you see all day long. Day trade algo, swing trade algo, oscillators, and we've got some other variations. You don't have to buy expensive software. If you buy a piece of software and you pay a couple grand for it, and you don't like it, or it's too complicated, or they don't give you good tech support, they're not giving you your money back. I mean, some of them give you a limited time. But you can spend a lot of money on software, and there isn't anybody to help guide you through it. Here you have a live chart. You have me on the mic all day long, and I rarely shut up. And so I'm talking you through these systems because to those of you who are not members, you're looking at this and it looks, like something from an air traffic control screen. I help you with all this, but it all boils down to this. Nobody needed to tell you to go short right here. So this broke at 75. We were short at 83 because there were other things that indicated to us it was going lower, and among those were the fact that you continually couldn't hold price above this regression line. But one of the things I said this afternoon when price was up here before it broke is that this short-term day trading oscillator, ES price gets magnetized to this. So either we were going to the moon or we were coming back to this. And so it'll return to this over and over and over again. Now, what gave you the break in Globex? You traded in a two-handle range for about 45 minutes. Now, part of that was due to the fact that they just held this in place before the Asian markets opened. But and by the way, we got short again in Globex at 28.66, and we covered that trade at 49.50 a little bit before I got on this recording. But what got us short, and by the way, we got short literally about a minute, 2 minutes before this broke. Why? Because you have this oscillator the key oscillator on here, this dashed white one. In Globex, you have it going down, not a real severe angle, but you can see how price couldn't get above it. And this oscillator kept pushing and pushing and pushing until literally about a minute before it broke. We got short again. So we were short up here at 85. We covered it into the close at 49.50. We shorted this again in Globex at 66, covered it at 49.50, 49.75. It was 49.50. But you know, you talk about trading with an edge. This is your edge. Look at how long the day trade algo was long. This day trade algo was long, and literally for 170, 180 handles, and it flipped. So that's going to be about it for tonight. If you want more information about our systems, please take a look at our website, mercurysignals.com. Our membership is currently heavily discounted, and that price runs until May 15th, or until all the seats, all the space we have available at that price is used up. So at maximum, that rate's going to run until May 15th. I don't think we're going to be running it that long, because we only have a limited number of seats that we can provide at that price, and then the rates are going up on May 16th. But there is no software to buy. And the cool thing about our service is we don't even bill you monthly, for crying out loud. We bill you every 2 weeks. And there are no contracts. You can cancel at any time. So if you try our service for 2 weeks, you don't like it, all right, you're done. No strings attached. But yet at the same time, we give you a lifetime rate lock. So if you subscribe to our service at the current heavily discounted rate, it doesn't matter what the rates go up to going forward. You will never have a rate increase, period. All right, so with that, we thank you so much for your time. We certainly hope that everybody in your family, in your home, in your life is healthy. Most importantly, understand with all the difficult circumstances that we're going through with the coronavirus and the job situation, God will always be there for you. And there is something much, much bigger and much more important than anything that any of us are going through right now. And so if you don't know the Lord, now's a real good time to get to know him. So with that, we're going to wrap. God bless you. God bless your family. And we hope to see you again real soon.